Well, hello again, everybody. This is John Norris at Trading Perspectives. As always, we have our good friend Sam Clement. Sam, say hello.
John, how are you doing?
Sam, I'm doing absolutely fantastic. If for no other reason than the election this past Tuesday is over, I'm tired of reading news about the campaigns. I'm tired of backbiting, mud throwing, all that stuff. So
and the text messages. I don't know if you
text
got
messages.
them as much as I did.
Listen, if you're on social media as well, all these people saying this crazy stuff. In any event, I'm glad that it's over.
Yep.
I'm very glad that it's over. And apparently the markets were yesterday, the Wednesday after the election, as everyone probably listening to this knows, the markets took off. I think the Dow was up over 1,500 points by the end of the day. The financial sector was up over 11%. Small caps up between 5 and 6%. Energy up around 5 to 6%. It was a wonderful day for the equity markets, just in general. Not everyone made money. Real estate sector was down, utilities were down, but a lot of people made a lot of money. And conversely, the bond market sold off like crazy.
Yep.
Absolutely selling off like crazy. So, Sam, here we are. It's the Thursday after the Wednesday and the Tuesday, which is generally when Thursday falls, by the way. After
Typically.
Wednesday and Tuesday.
Usually.
But usually, this year I think maybe some people thought that it might not. But regardless, what do we make of this? I mean, typically you'll get a little bit of a bounce in the markets, all that stuff. November's good for it. Markets historically tend to rally after presidential elections. If nothing else, it's over with, it's done. We know what to expect moving forward. The markets hate uncertainty. But yesterday was sort of weird.
Yeah. So I think we start with the equity markets and then we can move into the what happened with the bond market. But you mentioned it first off with things before the election, a little more volatile, and that's normal. Volatility picks up, and then the second the election's over, or the second it's known which way things are going to go, maybe a better way to put it, that volatility or that uncertainty is a good way to put it, starts to kind of just be removed. We can now largely predict what things are going to look like over the next 4 years, or at least have a game plan of it. So that uncertainty is largely removed. And I think a good point to make is, as great as the equity markets, you hint on this, as great as the equity markets were the day after, a lot of names were down.
Yes.
I mean, the breadth, which is the amount of names that are up versus down, was really not that great given how much the market was up. And I think
that's surprised by that.
I think that's the key takeaway, is that is kind of where the markets are going. There is risks with either party to certain sectors, certain areas of the market, certain business models, and that was kind of the game plan, or that's kind of the vision for what people think a Trump presidency is going to mean for the equity markets. We saw names that had China exposure, significant China exposure. Those names were not doing so great. A lot of them were down on such a big up day. Names that were super rate sensitive to the long end, a lot of real estate related or real estate somewhat
home builders, stuff like that.
Home builders, Home Depot type stuff, what have you. Those didn't have the best day ever yesterday. So those and names with lots of international currency exposure, if you have a lot of business outside of the U.S., I mean, those weren't great. So that's a long-winded way of saying the markets were great, and obviously the tax implications are great for earnings as a whole. But this isn't a story that every company is going to be impacted the same.
Well, I agree with you on that, but just kind of taking a look on the entire market as a whole, someone kind of pinned me in a corner. I mean, not one person, several people. What in the hell's going on? They might not have used such coarse language, Sam, but at least they were asking. And there are a number of different reasons without getting too nitty gritty. But I told pretty much everyone the same thing. Here we've had a wonderful run in the stock market over the last 2 years, right? I mean, 2022 seems like a distant memory in a lot of ways. 2023 was great. This year's been much better than I think a lot of people would have expected at the beginning of the year. Earnings have been okay. Earnings have been pretty good. But when you take a look at the price to earnings multiple, ratio, whatever you want to call it, you'll see that has expanded over the last couple of years. So investors have been willing to pay more and more for each unit of profit that corporate America has been able to generate. Part of that has been in anticipation of lower short-term rates, all that stuff. But even so, when you take a look at most recent earnings announcements, they've been good, they've been fine, but I don't think anyone would have expected the markets to continue to just go up and up and up,
Yep.
unless all of a sudden we saw a marked increase in corporate profitability in 2025, because you just can't keep on expanding your multiple
Right.
forever.
It works in the short run, but earnings growth is the best
Yes.
long run predictor. And we've talked about this before. We've had this multiple expansion. At some point, the E of that PE ratio is going to have to start kicking
It has
in.
to do it. There's just no other way around it. As sure as the nose on my face, which is getting larger as I get older, and as sure as the sun will come up in the east tomorrow, earnings have to accelerate in order to maintain a strong, healthy rally.
Yeah.
Now, with that being said, and with that in mind, really, you had two kind of divergent sort of views between the two candidates and parties this go around. One side, the Republicans were talking about cutting corporate taxes. I think Trump has mentioned something 15%. I think it's currently now 21%, if I'm not mistaken. And the other side was talking about increasing it to at least 25%. You don't need to be a mathematician or graduate of MIT to know that when corporate tax rates go down, businesses should make higher levels of profit.
Yeah, that's not a political point.
That's
I mean,
not
you
a
can talk
political
about
point.
ramifications after, and
we
tax
can talk about
revenue
all of that.
or
We can
what
talk
have
about
you.
that.
But
But where investors are concerned, a lower corporate tax rate is good for profitability, which should be good for share prices. I mean, that's just take the politics out of it. You're just simply an investor thinking solely about your investment portfolio. Someone comes up to you and says, what's better for your investment portfolio, lower corporate taxes or higher corporate taxes? What are you going to say?
lower.
Of course. And so that is, I think, part of it yesterday. I mean, without it, I cannot imagine that didn't play a part in some people's mindsets. Everything that you said is absolutely spot on accurate. So does this rally continue? You can't expect it to continue at 1,500 points in the Dow every day.
That'd be sweet.
Listen, tell me about it. How much longer does the rally continue, and to what sort of depth and breadth do you think we should be telling folks?
Well, it's hard to know right now.
Tough question.
He's not even president yet, right? We have a few more months, or really, I guess, around 2 months before we start to actually see any sort of substantial changes in policy.
And then it takes months for policies. Listen, I mean, no matter what happens, ultimately with the Trump Part 2, the first 6 months of the year is already largely baked in.
Mm-hmm. As far as corporate earnings and GDP growth,
it's already baked in.
But how much does just sentiment around something like the Tax Cuts and Jobs Act being extended another 10 years?
Yeah. Listen,
the markets are pricing in typically what's happening next year, right?
The investor psyche could be completely different, but in terms of just where we are in terms of economic growth, in terms of corporate profitability, just hard numbers, good chunk of the first part of next year is already baked in.
Absolutely. On companies, the GDP of the country as a whole, the tough thing to plan out is how much does sentiment change things?
That's right.
I mean, yes, so much of this is already, first quarter spending's largely planned out, for most companies already. Yeah. But how much does the sentiment changing if companies are more optimistic or pessimistic? Take your political viewpoint out of it. Sentiment does have some impact, but that's, I think, a hard thing to...
I agree with you on that.
It's a hard thing to predict out how much that's going to play a role in actual dollars and cents.
Actually, I agree with you 100%, as I always do, Sam.
Most of the time.
I agree with you 100% of the time, like 80% of the time.
Perfect.
Sort of like what that line from Anchorman. One of the things that in taking a look and reading social media leading up to the election, and while we're on topic of corporate tax rates and profitability, there seems to be really, in my estimation, maybe some lack of understanding of exactly how the corporate world works. Now, I'm not going to sit there and defend people that are making $50 million, $100 million a year when they didn't start the company. I'm not going to do that. I'm just simply not. However, there is absolutely no downside, in my estimation, to corporations making a higher level of profit. the higher the level of profits, the higher the wealth generation in society as a whole. And by the way, there's more money left over, literally and physically, and the bank accounts in order to do more research and development. And Sam, even hire more people and even have money to give out bigger raises.
Yeah.
So when I'm reading like we need to increase corporate tax rates in order to increase federal revenue, I'm thinking to myself, you got that backwards. And actually, to increase corporate revenue, you really need to cut corporate tax rates so there'll be more money floating around the private sector in order to generate more economic activity. And by the way, I know people will talk about inequality in society and what have you in terms of wealth. Growing wealth by increasing corporate profitability, by stock prices going up, all that does is expands the pie that much more. I mean, completely expands the pie. So some billionaires get wealthier. If my 401k plan is up 15%, I'm okay with that.
It's hard for lower quintiles to
grasp that,
to frankly move up to their net worth to grow without the high income earners, the billionaires of the world, income not growing, net worth to not grow.
The places where we have seen a significant reduction in the top quartile's wealth and a significant increase in the bottom quartile's wealth, when it happens at the same time, generally leads to poor overall results.
And that's kind of an obvious thing, this idea that the rising tide lifts all boats is very valid, right? It is very valid. The economy's going to...
It leads to inequalities in an absolute sense. It does. I mean, if Jeff Bezos grows his wealth 15% next year,
it's just the math thing.
And you grow your wealth 15% next year, then obviously, hey, your wealth still will increase by the same percentage, but by the same amount, but the absolute dollars are so much different. However, in that situation, Sam, how have you gotten screwed?
Well, you haven't, and frankly, a lot of times you can see it the other way, percentage-wise. If my portfolio is up 15%, my income's up 5%. I'm doing much better. A lot of these billionaires aren't making active income right now, and 15% on their portfolio is obviously going to be a bigger thing. So it's just a compounding interest, frankly.
It's awful when two people are sitting there staring at each other saying, I get it.
Wrap it up.
I get it. But really, we started off talking about just how, the market rally. We've talked about stocks, and then we kind of went down a little bit of a rabbit hole. I apologize for that. Everyone is listening. What in the world happened with the bond market yesterday? I mean, I woke up. This is what I do every morning when I wake up. Wake up at 5:30 a.m. What time do you wake up?
5:45, 6.
Okay, I wake up at 5:30. And I could do that. I could be more productive, go to the gym or what have you. I'm not that way at all. I get up, I play a game called the Quordle from Merriam-Webster. I play a game called the Waffle, all word games. And then, of course, the last game, the Wordle from the New York Times. And so I get that. I do that stuff, knock it out, get the cobwebs out of my head, and then immediately I go to the futures market, take a look what's happening, go read my stuff, what's going on overseas markets, all that, take a look at bond rates. And the first thing I did on Wednesday, because I went to sleep at 9:30 on Tuesday, I did not know who won. I didn't know at all. Woke up, I saw the market was up 1,200 points futures when I first turned them on. And then I went, what? Holy smoke. And then I immediately went over to the bond market. I did it on Yahoo Finance, and I went on Bloomberg, and then I went everywhere, and I go, what? It just doesn't, what? Because I have been doing this a pretty long period of time, longer than you've been alive. And I have not seen very many days when I've seen the bond market sell off as much as it was selling off prior to officially opening on Wednesday. It came back a little bit as the day went along, but you're talking about a 10 to 15 basis point increase in the 10-year and what have you in one trading session at one point. That's weird. What happened?
Well, that again, it's obviously different, but it's been it's cut from the same cloth of what worked on the other side of things. I mean, the equity market moves, I would say the fixed income market moves were more significant even than these 3% across indices on the equity side of things.
I agree.
But the higher long-term rates has been, again, whether it should be or not, we don't even have the policies yet, but higher long-term rates has been part of the Trump trade.
Yeah.
And, that in a silo doesn't tell you why, right? If long-term rates, you could say, we're going to blow it out with inflation. We're going to have 4% inflation over the next 30 years. That's why it's going up. Or you could say, we're going to have higher long-term growth rates. So you have to take that as a piece of this overall mosaic with what's happened in the equity markets, what's happened with the U.S. dollar, piece all these pieces of the puzzle together. And that's been the story, and it seems like the market was pricing in higher growth rates as a reason for why long end of the curve is steepening so significantly.
That would have to be really the only answer I could think of as well. Because when you take a look at the current administration, the Biden administration's predictions for the next 10 years, you go to table S2 of the budget there on.
Have it bookmarked.
Yeah, there you go. You'll see that current administration is predicting the accumulated deficit will grow another $19 trillion over the next 10 years. I'm not sure there's much that the Trump administration could do to increase that significantly. Maybe so, and there are people out there maybe yelling and screaming when I say that type of thing. However, I don't think bond investors are thinking that there's going to be that much difference between the two parties in terms of deficit accumulation, if you will. So it all would almost by default, in my estimation, I could be wrong, but in my estimation, people are anticipating higher rates of growth. That's the only thing I can think of that would cause that sort of market sell-off. That and the fact that since so much money was going into equities yesterday, the money had to come from somewhere. Believe it or not, no matter what Washington thinks, money's still somewhat finite. Money has to come from somewhere. So I'm going to sell these bonds I was holding on to in case of a gloom and doom scenario, and so I can go out and buy stocks.
Yeah, it's this mosaic again. It's this mosaic of where money flow is. I mean, it's kind of everything, right?
I think so.
Where is money coming from, and where is it going to be going?
Well, listen, I worry about that all the time.
I think everyone does. But and again, taking that uncertainty out, right? Not the uncertainty of what things are going to look like, but what policy is going to look like over the next 4 years. I mean that. We have a strong Republican Senate right now. I mean, the strongest it's been in a while.
Yeah.
I think there's a chance.
Probably end up with 53 Republican senators?
Probably not 54, but that seems to be the high possible.
Yeah, that seems to be the absolute limit. Yeah. I think last I checked, we're 52 with 52. One seems like, okay, let's go ahead and call it.
Yeah.
The other one's a real toss-up.
Probably the other way. But nonetheless, you take that uncertainty out, strong Republican Senate, Republican president, leaning Republican House, you have an 18-month runway, really.
Yes.
I mean, there is a lot that can be passed the first week. They're going to pass bills. They're going to young judges are going to be, stamped for approval every day just about. Policy can change really quickly when you have a clean sweep.
Well, it can change really quickly, and unfortunately, history suggests it doesn't always work out so well. It seems as though when either political party has all the levers of government, they don't do as well as what their adherents would like for them to do. And oftentimes gridlock is best because nothing gets done. Mm-hmm. However, if it's your party that does a clean sweep, you're ebullient, you're very joyous, and so we'll just have to see whether or not the Republicans can maintain control of the House. If that happens, I can't imagine that they won't extend the 2017 tax cuts. I just can't imagine that they wouldn't, which would be bad for estate planning attorneys, but at the same time, probably be pretty good for investors longer term. And then when you kind of take a look at everything, it's just like, this is not, Trump, believe it or not, is not an unknown quantity. We know he can be boorish. We know that a lot of people don't like him. He doesn't have very many filters, all of that stuff. We know that, but we also have 4 years worth of experience with him. In 2020, with the pandemic, listen, I don't care. Biden been in there. I don't care. Barack Obama, George Bush, Donald Trump. It was going to be a weird year, and things are going to get a little screwed up. I mean, really. So, but if you take a look at 2017, 18, 19, what did we see but lower taxes, which historically has been good for corporate profitability, and fewer regulations?
Yeah.
I mean, regulations actually came down a little bit. If nothing else, there wasn't any growth in regulations. And for everyone that thinks regulations are great, all they are is a cost on business. When you put a regulation on a business, businesses obviously have to adhere to it. And so that means that there's going to be a cost involved, either through lost opportunity costs or outright compliance costs.
Right.
And so when that happens, money's not being spent to arguably maybe its highest and best use in terms of generating corporate profitability and therefore wealth for investors. So we know kind of what Trump's policies are in that regard. Lower regulations, lower tax rates. And if that is what you like as an investor, which most investors probably would, at least those who are out to make as much money as they possibly can, and we can talk about greed maybe some other time when we have the podcast on politics and religion at the same time. That will be our last podcast, by the way.
Be a good sign-off.
That would be fantastic. But if you're out there simply to make money, we have a pretty good idea what Trump's going to bring. Not that the last couple of years during the Biden administration have been great for investors making money. I'm not trying to denigrate that. But we have a decent idea of what Trump brings. And right now, with how strong the market's been the last couple of years, with the question mark out there, what can corporate America do to increase their profitability moving forward? This came at a great time for a lot of investors that were kind of had that big question mark over their head.
Yep. Just kind of remove that question mark, and we have a little bit of a blueprint for what things are going to look like. And trade war is a question mark, but overall lower tax rates on companies,
and at least maybe not as many regulations moving forward. Add the two together, should be an increase in EPS, all other things being equal, earnings per share, and then we'll just have to see where it takes from there. Now, in terms of the remainder of the year, historically, November and December have been good for the stock market. Historically, on average, all that stuff. Past performance is not indicative of future results. All that good stuff. Historically, it's been okay. So I anticipate we'll probably skate through the remainder of the year, probably in the green. But it's because of the strength of the rally yesterday. The green might not be as dark for the remainder of the year as it was yesterday.
I agree.
All right. Well, guys, thank you all so much for listening. If you have any questions or comments, please, by all means, let us know. You can always drop us a line at tradingperspectives@oakworth.com, or you can leave us a review on the podcast outlet of your choice. As always, if you're interested in reading more or hearing more of what we got to say or how we think, you can go to oakworth.com, OAKWORTH.com. Take a look underneath the Thought Leadership tab and find links to all kinds of exciting information, including links to previous Trading Perspectives episodes, as well as links to our newsletter slash blog Common Sense, our quarterly piece, Macro and Market, and then also our advisory services group, headed by Mac Frazier, puts out a lot of good stuff. It's all there just waiting for you. And Sam, the best part about it is completely free.
Love it.
Well, maybe
no strings attached.
Well, I think people should love it. Well, I wouldn't mind making a little bit of money on it, but maybe one day. In any event, Sam, anything else to say on this exciting topic?
That's all I've got.
That's all I've got today, too. Y'all take care.